When the economic environment becomes uncertain, we provide the truth from a breadth of perspectives to help people make decisions. We not only compile and analyze the data that moves our ever-evolving economy, we carefully craft our own to provide clarity across industries, businesses, and employment markets. We identify unique opportunities to deliver asymmetric returns and focus on capturing value created during periods of higher volatility, transforming the financial landscape together. We're MacroEdge.
Good afternoon, everyone, and welcome to MacroEdge Radio. This is John Galt speaking live Friday afternoon, November 22nd, 2024. This is an unbelievable week for markets, for the economy, and for reality. But let's start with a quick and dirty market review, because that's what everybody cares about. I mean, after all, we have to check in the casino to make sure, one, it's still open, and two, we can still sit there and make money off of the crazy people who think that it's not rigged. Oh, did I go there? Yeah, I went there. Sorry about that. The problems I see right now are beyond any belief. And, you know, I am the perpetual bear, not because of the markets themselves, but because of the structure of the economy relating to the markets. And this is where I am really beginning to get seriously concerned. We're on pace, and our friend Don, the ye old MacroEdge, posted this up earlier, that we're on pace for another 20% plus gain for the year. Well, that's great, except for one thing. Back-to-back years like that, some of the years that's happened in, not much happened. However, in 1927 and 1928, things got a little hairy. Also, in 1980, we had a very interesting occurrence. People don't want to talk about that. Right before an election in the summer, a certain Federal Reserve chairman cut rates. That would be Paul Volcker, everyone's hero, everyone's greatest Fed governor ever, everyone's most fantastic guy who saved the world. The guy who took us off the gold standard, by the way. He's the one that talked Nixon into it. Well, what happened in 1980, he cut rates saying that we have inflation somewhat contained. It doesn't look like it's going to be persistent unless oil prices flare up. In 1981, inflation peaked out well over 15%, and the Fed funds rate followed suit. He crushed the economy with the most severe recession of that era since the Great Depression, as it was called back then. If you weren't alive back then, it was a hell of a time to be alive. And it was a hell of a time to remember how miserable everyone was during the late 70s and early 1980s until it turned around. Reagan was vilified. He inherited the garbage that Jimmy Carter put on the plate. I'm not a Trump fan. I'll state it openly. I'm not a favor of his personality or his policies. However, I will state openly for the record, this man is going to inherit the biggest steaming pile of crap you've ever seen. And what is going on is the speculation before it hits the plate. And when I say before it hits the plate, the Dow is today up 426.16, closing at 44,296.51. S&P up 20.56 to 59.69.34. Nasdaq up 31.23 to 19.003.65. That will fluctuate as we get the settling numbers in. Volume was decent, but not crazy. As I warned, if anybody pays attention, this is the end of trading. If you think anybody over nine figures was out today trading, you don't know what people with nine figures in the bank do. They're out on their planes heading to whatever island, family get together, or are already at the ski chalet and got some skiing in this morning. They're done. They're on vacation until December. Second or third, they won't be back. Monday or Tuesday. They don't have a schedule like us normal people. I have family members, somewhat related, who are worth that kind of stink money. And when you have that kind of money, you don't stay focused and married to the markets unless you're crazy or an addict or a gambler. You don't sit there and stay focused on the economy. You do what you want to do. But they're the ones that can make the economy move. They can make the markets move. And they're the ones that often on Wall Street manipulate it using the algos and play around with it. Now it's all of the second level junior traders who are trying to manipulate things and boost it up some more. So look for more up days, but look for some hidden distribution within that. In the commodities markets, the ones that count, gold up 33.70 to 27.0890, recovering most of the losses since the Trump victory. Silver up 35 cents to 31.30. WTI crude bounced back on the new Russian missile, up $1.06 to 71.15. Brent up to 75.04. But there is a warning out here for the economy that no one is listening to. The good doctor has decided to check in and make a house call. Copper was down another 4 cents today to 4.07. Pay attention. If copper breaches the $4 level, there's a good chance we're going to see recessionary indicators start to pick up and move forward. What we're hearing is because unemployment claims are low, there is no pressure on the economy, that everything is fine, unemployment is normalized, et cetera, et cetera. However, if you follow MacroEdge, if you follow Layoff Tracker, but if you follow MacroEdge, let me tell you, you're missing out because MacroEdge sits there and dictates what's going on in reality. We track these layoffs, and the layoffs this week were massive. And I have the feeling in December and January, it's going to be even worse. We're not talking 10 here, 1,000 here. We're talking thousands of people losing their jobs. So with this speculative economy, we have to talk about the tech earnings. And there are some companies that we're going to discuss. Nobody special, if you know Joe Noto Jack from the Doomer News Network, etc., does a daily show. He's going to join us after he finishes his X Space. Oh, he's already joining us. We are going to talk about some of these big tech earnings because he is one of the pioneers. Unfortunately, Greg will not be able to join us today because he got called into a last-minute meeting. That's what happens on the West Coast. He needs to move the East Coast, save some tax dollars. But we're going to talk about the SMCIs, the NVIDIAs, the MicroStrategies. We got to have a little bit of a discussion on some of this crypto thing that's going on. Before we start, though, the last indication of a speculative bubble, folks, it's unbelievable, but a banana taped to the wall with duct tape sold for $6.2 million this week. And you're going to tell me we're not in a bubble? Six, what do you think? Is it a bubble? Nope.
It's a bubble, John.
What do you think is the biggest warning? The bond market or just the speculative frenzy that's occurring now?
Credit spreads. Watching Blackstone sell $1 billion yesterday of collateralized loan obligation, private credit originated bonds, senior unsecured top tranche went for 150 bips over SOFR. That is insane. That's the bubble.
That is crazy.
Yep. And obviously MicroStrategy, Bitcoin, but at the same time.
Oh, and he hit a wall. This happens, folks. Bear with us because X Spaces and cellular technology is part of the issue. I do it from an office, but some people have to do it on the run. Six, are you back? All right. Well, we'll proceed on. Six, I appreciate it. We'll try to catch you back when you get into when you get whatever's going on with the computer worked out. Real quick, one more company to talk about, and I'll bring nobody special in here to talk about the big boys. But my indication of a bubble. You've never heard of this company before, most of you. It came across my screens this morning. It traded, average volume is 12 million shares a day. It traded 93 million shares today. It has a 52-week range of 35 cents to 6.40. It closed just a little while ago up. Let's refresh that screen and get this thing up here. Come on, ticker. I hate it when it does it. Up $1.34 to $6.10 a share. It's a company called Quantum Computing. It has zero sales. It loses 24 cents per share. It has rallied on news with no product, no sales, although a promise of a future product for a 2025 chip, quote unquote. Quantum Computing beforehand was a beverage company. It now has a market cap of $721 million on no sales. It was the largest Volume trading stock on the NASDAQ today at 90, now closing at 96 million shares, up 28%. If you look at the most active stocks on the NASDAQ lately, it looks like a biotech and software, computer hardware, nonsensical, speculative penny stock. If you remember all the movies about penny stocks, that's all you're seeing now. And guys, gals, when we see this, it's scary as hell. Quantum computing, by the way, I decided to pull their latest report, and I'll bring nobody special in on this. Their accounts receivable is $2,000. A $700 million company with $2,000 in accounts receivable. But there's no bubble, right, Jack?
Oh, yeah, definitely not a bubble. Great things are happening in stocks these days. Thank you guys for having me on. I appreciate that. And thank you for putting up with my live stream schedule so I could come in here a few minutes late.
That's okay. You're live streaming. I'm going to go ahead and recommend it. It conflicts with our time on Fridays only, but you do a fantastic job in the morning and in the afternoons with the updates, and all of us appreciate it. We really do.
Well, thank you. And again, I appreciate you guys having me on here. And while we were talking about signs of a bubble a few minutes ago, I just sent a tweet to John, and I don't know how to put it in the show notes. Sorry, guys, I'm a little Twitter illiterate here. So, but there was a tweet from Peter Berezin this morning, and it's a chart that's showing free cash flow for the S&P 500 since the highs in 2022, the previous high, right? You know, the end of 2022 or the beginning of 2022, we had a big sell-off in stocks. It lasted until basically ChatGPT was released in November of 2022. And then we went on this monster bull run that we've been on ever since. Well, since then, forward earnings estimates, revenues, everything has skyrocketed. The S&P has skyrocketed. But you know what you can't fake? What you can't fake with round tripping or channel stuffing or any of these silly accounting gimmicks that all of these frauds are using. You can't fake free cash flow. And free cash flow for the S&P 500 is negative 2.7% since the highs in 2022. It's gone down. Now, I don't know what the S&P has actually done. I'm pretty sure it's at least a double since then. Not quite a double, but the S&P, I'm sorry, we peaked in 2022 about 4,800, and here we are at 5,900. The free cash flow of these companies is negative over that time span. They're making less money, which of course means all of this rally is just multiple expansion. It's just people paying more for less earnings. That's a bubble. It's a by definition a speculative asset bubble.
When you look at it from the bubble perspective and you see things like, and if you're offended by the French, sorry folks, shit coins exploding in the last 4 weeks because a quote-unquote crypto-friendly currency president is coming into office, and Bitcoin teasing 100,000. With today, what I call the ultimate capitulation, Jim Cramer promoting Bitcoin and CNBC spending half their morning show, from what I heard, I didn't watch it, I had to watch the video replays, promoting Michael Saylor. If that's not the indication that we're near a peak, I don't know what is.
You know, I don't share the enthusiasm for the Trump presidency like so many investors do. I mean, look, I voted for the guy. I mean, I didn't vote for Kamina, but I did vote for Trump. But I honestly don't think it really mattered. I think what the market is telling us right now is they know that the money printing is coming back. They know that the near zero or even negative rates are coming back. And I talked about this on my stream this morning, right? Just stories that broke in the last 24 hours. You had Christine the Felon over at the European Central Bank. You know, she issued some talking points saying that the European Central Bank needed to act quickly to provide finance to innovative companies to enhance productivity. In other words, saying we're going to accelerate our rate cuts. And if you look at the Dixie chart when she said that, it's like one big middle finger to everybody holding euros around the world, because the Dixie shot up when she said that. The euro tanked, and the euro is the biggest component of the Dixie. So we got an ultra dovish European Central Bank this morning. And then a few moments later, you had this director, I forget his name, Schlegler or whatever, the guy at the Swiss National Bank. He came out and he said, I can't rule out negative interest rates. And then late yesterday, we got that guy up north in Canada, Trudeau, They're doing helicopter money again. They're sending $250 checks to people in Canada. Guys, we're like 2 years removed from the worst inflation since the 1970s. And we've got near zero interest rates, negative interest rates, helicopter money. And then on the same day, we had an article in the Wall Street Journal, and this is why I'm not as enthusiastic about a Trump presidency as a lot of people who vote my way are, talking about this guy Warsh, who might be the Treasury Secretary. And, I don't know much about Warsh, Kevin Warsh, who's being floated right now. I listened to a few of his interviews, and I like what the guy says. But the article in the Wall Street Journal says we're going to make him Treasury Secretary. And the idea is he'll stay in that post until Jerome Powell steps down, and then we're going to send him over to the Fed. There's supposed to be two separate independent institutions. And this started, depending on how far back you want to go, when they put Janet Yellen, a former Fed governor, as the Secretary of the Treasury. They forever blurred a line between the central bank and the Treasury that is so dangerous, that brings us closer to the just endless monetization of reckless government spending. And Trump seems like he's going to perpetuate that by proposing the same name for both posts. And so all those stories broke in the same day. And, all the attention is on Bitcoin right now, but I don't know if you guys noticed the price action in gold this week. Gold was up every single day this week. We started at 2563 on Monday. We just closed around 2,700. So you got gold is up another $150 an ounce this week. Everything is rallying. This is a melt up because the easy money is coming back.
So if, in your opinion, and I don't know if you've read my stuff or not, because I write profusely and sometimes stupidly, but I believe that we're watching Jay Powell attempt to emulate his hero in a real crazy manner by saying, I want to be like Paul Volcker. Well, Paul Volcker in 1980 created the biggest nightmare in the world and relit the inflationary fire at the end of 1980 and 81. When this was all said and done, God help us, we could see a major spike in inflation based on exactly what you said, with the threat or promise of lower interest rates over the intermediate term. And that's why I think the 10-year is staying stuck and trying very hard to break above the 4.5 level.
All those things that you said are true, that I do think Jay Powell fancies himself a Volcker. I don't know if anybody has, had a little intervention, or, Jerome walks into the room and everybody's sitting around and they're saying, Jay, we're here because we love you. Sit down. Somebody needs to tell him he's not a Paul Volcker. He's an Arthur Burns. All right. Because, yeah, he did that aggressive hiking cycle, but any chance Jay Powell had of being remembered as a Volcker went out the door with the bank term funding program when they bailed out the banks last year. They used currency debasement, call it money printing or whatever. There's disagreement on whether it was money printing or not. They debased the currency in order to bail out big Silicon Valley banks that were losing money. And do you really think we'd be sitting here with the S&P pushing, possibly 6,000 here soon? NVIDIA, $3.5 trillion company, gag me. Would we really be sitting here talking about this if they had not bailed out Silicon Valley Bank, which bailed out Silicon Valley investors, even Chinese investors, at the expense of everybody holding dollars? So if he wanted to be Paul Volcker, he could have let that bank fail. And he could have said, we had this Dodd-Frank Act that said the bank gets bailed in. We changed the rule, and he could have lived by that. But nope, the rich aren't allowed to lose money. And so they bailed out the bank. And then if that wasn't the end of it, you also had the 50 basis point cut. Why the 50 basis point cut when stocks were at all-time highs, when housing was still at all-time highs, when Bitcoin was approaching an all-time high, gold was at an all-time high, and they cut 50 basis points? Paul Volcker wouldn't have done that. Definitely not. And then now it's laughable. Sorry, one last point on this one. It's laughable.
Go ahead, sir. Go ahead.
Now he says we're in no hurry to cut rates anymore. Well, he was in a giant freaking hurry a few weeks ago. What happened between then and now? Oh, that's right. We had an election and the guy he doesn't like won. All of a sudden, he's in no hurry to cut rates anymore. That's interesting. All right, I'll shut up.
You do realize you just repeated everything that Paul Volcker did in the summer of 1980. He didn't trust Reagan. He thought he was a cowboy, and he cut rates. And he cut rates 50 basis points.
Interesting.
And that's what triggered I called it Volcker's folly. And if you look at the charts of the Fed funds rate, right after he cut rates. It bottomed right before the election, and then the Fed funds rate had to creep up because inflation, CPI, it skyrocketed. Now, they all blame it on the oil and the conflicts and everything, but it was built in because money was too loose for that era, and it blew up. And I think he's going to duplicate Volcker, but I think more so he's going to duplicate Benjamin Strong, who also cut rates back in 1927 by 50 basis points and created the biggest stock bubble in history.
Wow. Well, you'll forgive me. I was born in February of 1980, so I wasn't following the Dow and CPI quite as closely as I do now. Back then, I had other priorities.
Oh God, I was in college. I was just getting ready to go to college. Thanks for reminding me. Oh my God, I'm old. Okay, folks.
Left in me.
Well, we got bubbles to talk about, and I'm holding some very interesting documents in my hands because I like to print things and waste ink, and we just don't cut enough trees down. But I got to ask you, when you first sniffed out the SMCI NVIDIA story, did you really think that it would become a big internet sensation versus what they're actually publishing in their garbage reports now? I am reading this stuff in absolute shock that these are passing as financial reports. And it blows my mind. Everyone says, well, the SEC is going to do something. Sure, Jan, good luck with that. Good luck with it. The SEC, which is paid off by Wall Street and hires people from the SEC to regulate their own offices and boards, is going to have the SEC come in and do something to the most valuable company in the NASDAQ. What did you think of that as you read the news flow from last week to this week? Let's start with whichever one you wish, sir.
So, I kind of just stumbled into this whole NVIDIA story. I mean, it started last August after NVIDIA posted, of course, a magnificent revenue beat. They posted a $2.3 billion data center beat. That this was like late August, early September of 2023. And okay, $2.3 billion beat. Wow, these numbers are amazing. And, we were still only about 6 months off the lows after ChatGPT had come out. We the market bottomed November of 2022. So we had started to rally. We weren't in this rip your face off rally yet, but you were already starting to sense that NVIDIA was the market at this point. The market was following what NVIDIA was doing. And so I see this $2.3 billion data center beat in NVIDIA's earnings. And then I catch a tweet by Samantha LeDuc from LeDuc Trading, who points out that NVIDIA had just signed a deal with this company, CoreWeave, who nobody had ever heard of for good reason. They didn't exist a few months earlier. This company, CoreWeave, had just secured a $2.3 billion line of credit, exactly the amount of money that NVIDIA had beat by. And this line of credit was collateralized by NVIDIA chips. And, I don't know if you guys are aware of this, but used circuit cards don't exactly hold their value. I used the phrase on Twitter the other day: used circuit cards depreciate faster than virginity on prom night. These are not things that are going to hold up over time. They burn out, they catch fire, they overheat, apparently a lot lately, but they very rapidly depreciate. It's the last thing in the world you would use for collateral. Who in their right mind would loan money using these chips as collateral? Somebody who's making money some other way would do it, is the answer to that. So I start looking into this. I invited Samantha LeDuc to come on my channel and talk about this in an interview because I thought the numbers were very interesting and curious enough. And so I start looking into CoreWeave, and within 5 minutes of looking into CoreWeave, I go to their website. I found out who their CEO and their chief technical officer is and their board of directors. And I go to these guys' LinkedIn pages. Right away, I can tell they're hedge fund guys. These are financial engineers. There's no tech expertise among any of the senior leadership team. There's no MIT degrees, nothing. They're all financiers. They had run this hedge fund called Hudson Ridge Asset Management that went belly up in the 20 teens. And then when that hedge fund failed, they started mining Ethereum. And then, of course, Ethereum price crashed. They got out of Ethereum mining. But the thing that really caught my eye is that these guys all cut their teeth selling carbon credits for a company called NatSource. Both the CEO of CoreWeave, Michael and Trader, and also one of their other C-suite guys had worked at this NatSource company, and one of the members of their board of directors was their boss at NatSource. And so carbon credits, crypto mining, and now the AI bubble. I'm like, okay, these are some shady industries. It's not proof of any crime, but these are industries that overlap with a lot of bad dudes, a lot of things like money laundering, like embezzlement. So, right away, this is just 5 minutes of Googling. I find this stuff out. I find their network of 60 shell companies in the Cayman Islands that they use to trade carbon credits through. And then, I did a little bit more research and I find this big report from Interpol about how financial criminals are using carbon credits to move money all over the world. And I'm like, wow, this is exactly what these CoreWeave guys were doing when they worked at NatSource. Here's the shell companies that they used to do it. And so I made a couple of videos about this. And, it wasn't a smoking gun. It wasn't proof of fraud. But holy shit, this is the company that's propping up the whole stock market. And these guys are into some stuff that overlaps with some very shady business. Here's Interpol describing exactly what these guys are doing. And here's the shell companies they used to do it. Somebody go look here. Somebody who's got more resources than me, go look at what's going on here and make sure this isn't what I'm afraid it might be. And oh my God, what came back? I wasn't really expecting to go viral. I wasn't expecting a big reaction. My channel still is very small. I mean, I don't have that big of a following. But that video, especially the one about Magnetar Capital, the firm that was financing all of CoreWeave's expansion, it ended up getting a few million views on X. And the next thing I know, there's this article in MarketWatch that's saying, ignore this guy, ignore what he's saying. It's a conspiracy theory, like it's not the freaking 2020s. And that's when I was like, whoa, I've got all these journalists are now saying, hey, everybody, don't look, don't investigate, don't ask questions, just pile into the stock aimlessly. And that was a wake up call. That was a holy shit moment for me when I see MarketWatch. And of course, MarketWatch runs the article, and then Business Insider and Barron's and everybody picks it up and parrots it. It goes all over. It doesn't mention me by name. It doesn't even mention CoreWeave. It doesn't mention the shell companies or the carbon credits. It just says, don't listen to this guy. And I found that to be shocking. And to this day, no journalist has ever reached out to me asking for any of the information. I did a video saying, anybody wants my notes, I'll give you links to everything I found. I have a document prepared. It's ready for anybody who ever wants to look at it. Nobody ever called. And I mean, ever since then, I found other stories. I found an Irish drug cartel that does human trafficking and drug trafficking, and they were setting up an AI company using GPUs to launder their money. There was a known money launderer was setting up this company. It was a company called Hyperscale Nexus. They were trying to merge with a marijuana company here in the US because artificial intelligence and marijuana companies have so much in common, right? And, I did a video about that. Nobody paid attention to it. That merger fell apart 3 days after I did the video. So obviously I ruined their plans. So, I'm going around and I'm making enemies with drug cartels and with money launderers, but I'm not exactly blowing up my channel or anything in the process.
Well, I understand it completely. Believe me, I did an article about the carbon credit scheme that was developed by Goldman Sachs and Citigroup and a few other people back in 2012. Nobody cared. And it's the same thing as the crypto. It's based on nothing. It's simply a trading instrument to sit there and create something so they can make a profit off of selling the credits to adults and companies that really just want to abide by a mythical problem, which is no longer really an issue if you look at the emissions from the modern engines, et cetera, in our society. But that's another subject another day. Let's go back to the NVIDIA issue, because NVIDIA has engaged in some, lack of a better term, some shady, questionable stuff. And I'm going to quote some things from the 10Q. And just Dario, by the way, if you don't follow, everybody should follow him also on Twitter if you're not, or X. And also Greg Crennan, a Coastal Journal. Follow him. I'm sorry he can't be here with us today to sit there and talk about his article. But one of the questions I have, and I want to hear yours, how in the world does the small nation of Singapore become one of the leading revenue sources above China, including Hong Kong, above Taiwan, and above everyone else? 7.6 billion in revenue, yet the end customer and shipping location may be different from our customer's billing location. For example, Most shipments associated with Singapore revenue were to locations other than Singapore, and shipments to Singapore were insignificant. If it's the number 2 revenue location for the 3 months and 9 months ending on October 27th, please tell me how that's insignificant. And please fill me in. Are we transshipping to countries that we're not supposed to? Because that sounds pretty shady to me. What's your opinion, sir?
Look, I think we can all agree, and we don't need a tinfoil hat to reach this conclusion. I think we can all agree that these things are obviously being shipped to China in huge freaking numbers. These H100 GPUs that are supposed to be illegal, right? I mean, it's supposed to be illegal to sell these things to China right now because AI has military applications, and we know the Chinese military wants this stuff. We know our military wants this stuff. And I want to give credit to a guy named the Orcafin, who he was actually the one who first uncovered the SMCI story. Hindenburg Research did an excellent report that took Orcafin's work and expanded on it. But really, what happened with the SMCI fraud, it was the Orcafin who uncovered it, and with the unrelated parties. And then Hindenburg expanded it, and they realized, hey, SMCI is sending huge number of servers to China. Obviously, all these servers that are going to Singapore that aren't going to Singapore, why would you do that unless the destination is China? It's obviously where they're going. And if you still don't believe me, go on eBay and type H100 GPU, and you'll find more than 10 available all over the place, selling at huge discounts, ships from China, NVIDIA H100 GPUs. So many of these things have gotten into China that you can buy them on freaking eBay now. So, is it a bubble?
I'm going to interrupt you for a minute. Before we go to this next thing that I'm going to say, which is going to blow everyone's mind, I got to do a commercial plug for you and for MacroEdge.net. MacroEdge.net, subscribe, get a 2-week free trial to Ozone, see the data you're not seeing, and the RE insights, real estate insights with Melody, Mr. Awesome, and others. Folks, don't miss out on this. Nobody special. Doomer News Network, X, at JG Nuke. Don't miss his insights, folks. He's able to cover a lot of things that some of us can't look at every day, like what you're hearing about NVIDIA. And I'm going to throw this out to you real quick. You know where I found H100s? Alibaba. All day long. Think about that. If they're available on Alibaba, they're all over the world. And by the way, folks, even though we don't ship to Iran, correct me if I'm wrong, JG, Jack, I do believe that China ships to Iran, so they're getting those boards also.
It's funny you should mention that, because that hyperscale Nexus story that I was telling you about, the fake company that was laundering cartel money using GPUs as a mechanism. Well, the head of that cartel, a guy named Daniel Kinahan, the guy who had the billions of dollars that was trying to be laundered, he was believed to be hiding out in Iran, because right now Dubai is negotiating with, I believe it's Norway, where he's wanted for extradition, and Ireland as well. So, here you've got an international cartel leader with billions of dollars to launder. He's financing an AI startup that's buying all of these NVIDIA GPUs. They're using a company called Xfusion, which is a spinoff of Huawei, a Chinese company, and the guy is hiding in Iran. It's not too hard to imagine. Yeah, these GPUs are making their way to Iran too.
And we wonder why their missiles are getting better. So let's go to the next part of this. And this is something that's in everyone's analysis. We hear so much about the H200, the Hopper, quote unquote, strong demand. Now, I think this is one of my pet peeves, and I'm sure it's one of yours also. You listen to the financial media, not FinTwit or the real financial media like our teams are, and they say, just read the press release. Don't read the 10Q. And you start reading the 10Q, and they claim that the data center revenue is up 112% from a year ago and 17% sequentially. But what makes it unusual is if you look at the Hopper H200, there's no increase in future purchase obligations. How in the Sam hell can you say it's strong and solid, but we don't foresee something over the next 6 to 12 months?
Well, that's easy to say if you're a company that, say, hypothetically had to settle with the SEC for making materially false statements in 2018 about how many of your GPUs were being used for crypto mining and lying instead, claiming that they were being sold only to video gamers. NVIDIA did that in 2018. And let's say, hypothetically, you're a company that had to settle with the SEC in 2003 because your CFO committed accounting fraud by omitting side deals that were cut with vendors and withholding that information from your independent auditors in order to inflate your earnings by 15%. This company has a history of outright fraud and making materially false statements. So how can you make a statement like you just answered? The answer is simple. They're liars. That's how.
Well, we also call that enhanced financial reporting in the industry. And that brings us to some more enhancements. For some reason, they've had an increase in accounts receivable of 77% since January. Thank you, Greg, for that update from the Coastal Journal. But for some reason, they're pulling that into net earnings, but it's still in the receivable category. Like you said, we have a lot of shady, shall we say, crap going on, and most people don't read the 10 Qs. Would you agree with that?
Yes, I would. And, look, a big increase in accounts receivable in a vacuum is not necessarily that bad. It's to be expected in a fast growing company. But when your accounts receivable is growing faster than your revenue is growing, now it's something you take a look at. There's two possible explanations for that, right? Either you're extending credit to customers who are not creditworthy, and so you're booking revenue from sales to these people, but they haven't paid you yet. And well, let's say if your third largest customer is a company like Supermicro, that might be something you want to worry about because Supermicro's got no shortage of problems. Or it could also be an indicator of channel stuffing. Means you're just pushing the stuff out the door so you can book the revenue and then forget it. Who cares if they pay us or not? We just got to beat earnings. We'll worry about it next week. So, again, this is not outright proof of any wrongdoing, but it is another little column of smoke on the horizon. There's more smoke. And, you also got proximity to criminals and money launderers and carbon credits and all this other stuff. When you add all of these things up, now you've got a pattern. And the pattern is so overwhelming at this point. And they continue to ignore it because, well, they're making money off of it. That's why.
What do you make of this concept within their 10Q where they sit there and file a concentration level, and instead of naming the customers, customer A, customer B, customer C, customer D, when the customers are not named, you have no way of tracking back through their 10Q. And I know I'm just reciting the same things that you're probably going to say again, but there's a lot of stuff that doesn't fit. And I'm not going to say SMCI is any of those alphabet letters because I can't prove it. But when you start looking at what's going on and you start putting 2 plus 2 together, it doesn't take a lot to realize the channel stuffing theory on quote unquote future sales, whether those sales close, exist, or they collect revenue from it, is pretty obvious.
Yeah, I agree. I mean, at this point, the channel stuffing concept, it's not a conspiracy theory now. It's not like just a wild theory. The numbers have now gotten so big that any sane person has to be questioning them. And Jensen Huang coming out and doing his best impression of Crazy Eddie, saying demand for the Blackwell chips is insane. That gets repeated over and over again. That's the title on CNBC. That's the soundbite that they play on Bloomberg. Nobody talks about the growth in accounts receivable. Nobody talks about, is company A this quarter the same as company A last quarter? Are they playing musical chairs with the alphabet there? And, just Dario, I read that article that Dario put out. It was excellent. I'll plug Dario's his website again, too, because he's done some excellent work and he's got a sharper pencil than me. So he can pick out the accounting gimmicks better than I can. He noted that there was one big customer that was zero last quarter and now they're a couple of billion. And then there's another customer that was a couple billion last quarter and now they're zero. We don't know which company it is, but it's obviously Supermicro is involved somewhere there. And we've heard stories that NVIDIA is diverting Supermicro shipments over to Dell right now. So, we still don't know what the fallout from Supermicro the obvious fraud at Supermicro. I mean, you'd have to be, you're willfully ignorant at this point if you've read any of the research on Supermicro, if you really believe those guys are on the straight and narrow. Maybe investing's not for you. But the question is, how much will that affect NVIDIA now? It's at least their third largest customer. It's going to affect them. And it's a near zero margin business creating these servers. I mean, Dell is making a lot of revenue off of these servers, but they're making almost no profits. They're just gathering market share right now. They're not making any money off of this stuff. So is Dell going to just expand to absorb all of that Supermicro demand? I don't think that's a safe assumption, especially not when their margins are so low. Margins are going to get even lower now. So, that, again, not outright proof of fraud, but it's one more of those questions. Man, there seems to be a lot of them.
That brings up the next point. Supermicro. Boy, I tell you what, they're bragging about BDO becoming their new independent registered public accounting firm. I'm trying to keep a straight face while I'm reading their statement from the other day on November 18th. Now, they never said that BDO has done an audit, performed any in-detail reporting, or even looked at their books. And in their cautionary statement regarding forward-looking statements, it basically says they're going to look at them, but there's no guarantee that they're going to concur or approve or do exactly what Price Waterhouse did. The other part of problem with the non-compliance report from the 20th, we still don't have an annual report or 2 quarterly reports from Supermicro. Yet they're still allegedly one of the largest customers of NVIDIA. We also can look at this as, well, maybe they're just having some financial problems because of the churn there or whatever. However, the volume of their product sales doesn't seem to jive with what NVIDIA is reporting for revenues from customer ABCD. Any comments?
You're right to point out all those things about Supermicro. I mean, that stock, they're like up over $30 now. This market will buy anything. They announced that they had hired BDO. That was it. BDO has not signed off on anything. BDO hasn't even opened the books yet that we know of. So all they did was announce that we hired a new auditor because our last auditor quit and told the world what scumbags we are. That's it. And that's why that stock is up 60, 70% in a week. And then shortly after the announcement from that they had hired BDO, they got another non-compliance letter from the NASDAQ. That didn't get mentioned in any of the CNBC headlines. The NASDAQ just reminded Supermicro that they're still not in compliance. And, all it really does is they triggered an automatic review period. They submitted their compliance plan to hopefully not end up in jail. And the NASDAQ now has to review it. And so they're automatically given a stay of execution. They won't be delisted until NASDAQ reviews the plan. And that could be as much as another 60 days from now, or probably at this point, it's probably like another 55 days from now. Nothing has changed. They hired an auditor. That auditor hasn't looked. They're still not in compliance with the NASDAQ. They're still at risk of delisting. And, again, the history of fraud here. The market is ignoring the history of fraud. Supermicro was engaged in widespread channel stuffing in 2018. They were delisted for it. They followed the same pattern. They didn't actually get delisted until I think it was like August of 2020. It took like a year and a half for them to actually get booted from the NASDAQ. They got booted from the NASDAQ. They fired a bunch of people. They submitted their plan to get relisted. After they got relisted, they immediately rehired all of the people that they fired and started doing the same thing again. And that's the subject of this whistleblower lawsuit that's going on in California right now. One of their guys in accounting raised this issue and said, hey, we just got in all of this regulatory trouble and we fired all these people. And now you guys hired them all back and you're doing the same thing again. And they fired the guy for complaining about that. And he's suing the company. And that was one of the big material things in the Hindenburg report was that whistleblower lawsuit. And on top of that, I'd add they're still under investigation from the Department of Justice. Nothing has changed for Supermicro, and yet the default setting for this market is always optimism. It's always, well, we don't have outright proof, that this is a complete and total fraud, which in my opinion we do, but they're insisting we don't. And so therefore it's not a fraud. The stock is $33 right now. I mean, this thing a month ago, not even a month ago, it was $18. It's rallied almost 100% on nothing.
And think about this. Is there been any material increase in sales or product production from SMCI? No, nothing. There's no evidence. And what I'm looking at, it's like a biotech, which gets declined in the last 60 days of their testing from the FDA. Oh, sorry, didn't work. Goodbye. We got your money. Thanks for the new Ferrari. We go to the next stage of this, and it's an insanity. I think, honestly, JG, Jack, we're in an insane asylum right now. You look at what's going on with NVIDIA. You look at what's going on with SMCI. Today, this was broken. I'm sure you saw this, or if you haven't yet, on the MacroEdge thread. We have an internal thread, folks, where we do show discussion behind the scenes. German insurance giant Allianz bought 24.75% of MicroStrategy's 2031 bond. Folks, tell me that the world hasn't gone insane. I'm holding in my soon-to-be cigar nicotine-stained hands a lot of information about MicroStrategy, such as Mike Seller being on CNBC saying, we're making $500 million a day. Staring at my screen, we're selling dollar bills for $3. Sometimes a million takes a minute. We might be the most profitable company in the United States. In crypto, folks, they don't make jack shit. Sorry for the French. Not sorry. Another thing from Holger, totally crazy. MicroStrategy trading at 535. The stock market's value is nearly 88 billion higher than the value of the 331,000 Bitcoin it holds. In other words, MicroStrategy was trading at 3.7 times its underlying Bitcoin holdings, excluding its software business, which is in decline since 2015. And last but not least, Charlie Bliello, who has been a saint if you're paying attention to him, folks. NVIDIA is no longer the best performing stock in the Russell 1000 over the last 7 years. With a return of 3,420%, MicroStrategy has surged past NVIDIA to take over the top spot. One more time, folks, and I'm going to invite our friend Jack to comment on all this before I go to the rest of MicroStrategy's garbage. What is your opinion of this bubblicious situation, which looks a hell of a lot more like 1929 than 1999?
So what I think Michael Saylor has figured out with his little infinite money glitch, and I just wrapped up my afternoon show. We talked about this very subject, about the numbers behind these bonds that MicroStrategy seems to be selling like crazy. And, you know, he was saying we're selling a dollar bill for $3. He was embellishing a little bit. He's selling a dollar for $1.55. That's what he's doing right now. These bonds that they're selling, that Allianz is buying, they are senior unsecured bonds. So they're backed by nothing. They have 0% interest attached to them. They yield nothing. You can demand your money back in 2028. You can get 100% of your cash back. That's if Bitcoin goes down. But really what these are is they're essentially call options on MicroStrategy stock, because in effective, I think it's December 30th of 2029, the end of this decade, you will be able to redeem $1,000 in principal amount of these notes for 1.4872 shares of MicroStrategy stock. And that is the draw of these bonds that are being bought right now. They're basically selling a call option on MicroStrategy shares. And if you go based on the price they're selling these bonds for and the redemption amount, it's a strike price of about $672 for MicroStrategy stock, which represents a 55% premium over the share price on the day they closed this deal. So it's a very expensive call option on MicroStrategy stock. And MicroStrategy stock is basically a levered bet on Bitcoin, as you mentioned, is trading at 3 times its Bitcoin holdings. So who in their right mind would buy this stuff? Well, I don't know this for a fact, but I'm willing to bet that there is some law over in Europe or something in their bylaws that Alliance Insurance is not allowed to buy Bitcoin or own Bitcoin outright. And so what Michael Saylor is doing is he has created a very expensive backdoor that allows these institutions to get price exposure to Bitcoin while making Michael Saylor very expensive and they're very rich in the process. That's what's going on with these bonds. It's just a highly levered call option on MicroStrategy stock.
Did you see the 104? I think it was $142 million bet on MicroStrategy finishing below 300 in the options market?
What was the time frame on that? Below 300?
February.
This February coming up?
Yes.
That might be a little ambitious.
Well, we also have another bet for close to $48 million on MicroStrategy finishing above 600 on a January strike. That's how crazy this has gotten.
Yeah. You know, we've been here before. We were here in 21, and before that we were there in 17, right? Where this happens every time in this Bitcoin halving cycle. You get the price starts to move up because the payouts to the miners gets cut in half. And, you know, your Bitcoin miners is your regular everyday selling pressure on Bitcoin. They sell Bitcoin to cover their power costs and their capital costs. And so when the miners' payouts get cut in half, there's automatically less selling pressure on Bitcoin. So the price starts to move higher. And then eventually, as the price starts to move higher, it triggers a FOMO rally. And we've seen it several times now. I think this is the 4th time this has happened. Eventually, that FOMO rally reaches such proportions that the fraudsters take it over, and they take it vertical, and they enable the fraud. And then when that fraud is exposed, the price crashes. Last time it was FTX. The time before that, it was like your OneCoin or maybe BitConnect. Before that, it was the Mt. Gox hack that crashed Bitcoin after the big halving rally. This time around, it very well may be MicroStrategy, or it might be somebody we haven't seen, but we've been here before and we'll be here again. This is a very predictable trend. And historically, we don't get the crash until 16 to 18 months after the halving. And the halving was in April of this year. So that's why I think those bets that MicroStrategy goes below 300, I think eventually that'll be probably proven accurate, but I think February is probably a little early. If I was forced to make that bet, I'd say something like an October or November is when you might see that happen next year.
I'm going to rarely, for the first time in a while, disagree with you. I think that events that happen in January overtake the market. And I think that the speculative frenzy comes busting down because I believe that the NBER will proceed to revise everything and announce the recession started this year and says, well, there was no recession until Trump got elected. Same strategy as what occurred with Reagan. I think we're going to see a little bit of a replay of history in that regard. I don't know if you saw MicroStrategy's article in Bloomberg today. Of course, I'm up at bizarre hours. It was at 4:39 a.m. Written by Lionel Laurent. He says, remarkably, the company's credit worthiness is rated by the agency S&P has actually improved, rising to B- from CCC+. Considering this firm is plowing billions into illiquid assets with no cash flows, the CFA holding TradeFi's world seem to have some laser eyes of its own. Now, as MicroStrategy doubles down with a plan to raise $42 billion more to buy Bitcoin, the issue of sustainability is hovering into view. When you think about this, using a theoretical model of future increases in a cryptocurrency based on zero utilization in the real world, does that not scare the hell out of the credit markets and indicate that we are indeed introducing ourselves to a private credit and public credit risk when we're just issuing garbage bonds, putting a B, A minus label on them and saying, hey, they'll make good because Bitcoin never goes down?
Yeah, and this is where we get into Michael Saylor he's just a little too comfortable with risk, this guy. He avoided liquidation by a couple of $1,000s last time. I mean, the crypto winter, the last one that we had, I think we got as low as about $16,000 in Bitcoin. It was somewhere around that was the bottom. 13,000 was when the margin man comes knocking to Michael Saylor back then. So, he made very similar bets earlier this decade, and we got very close to getting liquidated. And I think that's the doomsday scenario that a lot of people who don't like Bitcoin are predicting. It's if that liquidation ever were to happen, if Saylor ever gets that margin call and that selling starts, look out below. That would be a bloodbath. Now, he just barely avoided it during the last winter, and again, like within like $3,000 of being liquidated, and now here he is. He's taken out more leverage, and he's buying in the 80s and the 90s. So he got away with it, and he's going to try it again. Maybe it comes back to haunt him this time. Maybe it doesn't. But a guy like Saylor, he will continue to push the boundaries until he blows up. So I think it's only a matter of time before MicroStrategy blows up. Is it going to be this cycle, next cycle, the one after? I don't know. But man, this guy's got an appetite for risk. He'll make Caroline Ellison blush with that. Let's just put it that way.
This is true. Then again, I'm surprised ARK hasn't made them their number one investment.
I'll give them a chance.
That's a cheap shot in the industry, folks. Sorry.
How are those EV investments going?
Exactly. Yeah, by the way, retail has been buying into MicroStrategy heavily, and that is the scariest sign of the top because they're always the bag holders. I don't want to abuse our time, but we have people requesting to talk to you. Would you be willing to take a question or two?
Absolutely.
Well, I'm going to bring up Bruno. He was first on the list, so we'll bring him up first. Go ahead, sir. You should be on in just a minute. X is always lagging. What can I say? It takes a moment or two. I think that what we're witnessing here is the ultimate in bubbles. And honest to God, I've never seen anything like this, Jack, since 2000. And when I was there for that, and I depended on a broker for my investments, I got killed. This is looking a lot worse, though, because now everybody can do it directly, and they think there's some protection or bailout in the background. Bruno, go ahead, sir.
Well, a couple of things. I hope, I don't know if it's been touched on, but of course, Saylor's had his problems with the SEC in the past. Last time there was a tech bubble, since we're referring to that very relevant analogy in history. And when he was CEO of a company called MicroStrategy, and I put the link in the pill if people are wondering about that. I think the history repeats, and the parallels to 1980 politically and otherwise, and to 2000 are incredible, and they're legion. So I'll just say, nobody special. You're doing fantastic work, man. And you're such a tremendous asset, and the way you present this stuff is really fun. The tone in your videos, the editing, the music, it's brilliant. And so don't put yourself at risk. When I first got into this stuff, I was mentored by a notorious short seller and knocking over the sacred cows at the time. There was a lot of organized crime involved in that too. And yeah, don't put yourself at risk, man. I'll just say that. You're too fun and too great an asset. Now, my question to anyone on the panel, if we want to go there, what about the risk in banks? The smart money from Buffett on down has been selling banks hard, hard, hard. Bank of America has some real serious issues, and there's other stuff, like what we're talking about now. Most people just don't want to know about it, don't want to report on it, but the risk is real. And I think it's a feedback loop with the insane amount of leverage that's available in crypto to total noobs. You can sign up for an account today and be trading crypto at 50, 200, 300 to 1 leverage. I don't think the yen carry trade is the risk. I think what I've been calling the crypto carry trade is the risk, or the probable black swan. And for what it's worth, I've been in crypto. I started emailing about Bitcoin when it was 11 cents, and I've been in crypto since 2012. So the idea that Bitcoin never goes down Yeah, that's laughable. So you put all these things together I've brought up, it's a pretty toxic stew, and it will poison the whole thing. Thank you for spaces like this. It's rare to hear sobriety in today's markets.
Go ahead, nobody. Go ahead, Jack.
So, when you're talking about black swans there, I mean, look, you pick your poison. You got commercial real estate, you got private credit that I think is probably a risk a lot of people are not aware of. Banks are getting out of certain businesses, and private credit is piling into those businesses, borrowing money from banks to do what the banks aren't allowed to do. So essentially, the banks are holding the same crap now. The AI bubble is obviously a big risk. You got a bubble forming in crypto again. Uh, World War III, we'll throw that one in there. Sure, why not? It's the 2020s. So no shortage of risks. Now, you mentioned the banks. There's something interesting. There's been a slight change in the banks recently that's gone unnoticed, because there have been some failures this year. They've been very small. All the big failures that happened last year, the second, third, and fourth largest bank failures in U.S. history, everybody got bailed out. Everybody got everything back at those banks. Now, these last two that happened, they're very quiet. You had a small one in Lindsay, Oklahoma called First National Bank that just failed. It failed because of a fraud. I'm not sure what exactly happened there, but I'm pretty sure it involves laundering cartel money for the Chinese triads that are moving illegal marijuana from a state where it's legal in Oklahoma to states where it's still illegal. I'm pretty sure that's what happened over there. I can't prove it yet, but that's going on. That bank failed, and the difference there, it was a tiny little bank, is that the uninsured depositors did not get bailed out. They only got back 50 cents on the dollar for their uninsured deposits. So we actually have an instance of a bank failing and people losing money. That's the first time that's happened since this mess started in 2023 with Silicon Valley Bank. So uninsured depositors losing money, that's new. That's what they were afraid of causing the stampede. Now, they only lost 50 cents on the dollar. And then more recently, it was just about 2 weeks ago, there was a credit union in Florida that failed. Now, it wasn't, the FDIC wasn't involved because credit unions are governed by a different set of statutes, but it's very similar. And at that credit union that failed, the uninsured depositors lost everything there. So they're kind of easing us out of this bail everybody out situation to the point where, okay, now the uninsured depositors aren't getting bailed out because these are tiny institutions. Let's see if we can get away with this without causing a stampede of the uninsured. And I think that the regulators are kind of testing the waters to get out of this corner that they've painted themselves into by bailing everybody out. And by the way, that credit union in Florida that failed, I went and I looked at their books, and for the last 3 years, almost everything they had is in loans. There's no losses from U.S. bonds or anything like that. But they made almost all of their loans were for auto loans. So it is people not paying for their cars that failed that little credit union in Florida. So we can add what's going on in the auto industry to that list of black swans. We've also had some information from who was it? Ally Financial was the big bank that posted a few weeks ago that they're seeing big rises in delinquencies in their auto loans, which is their signature product. So what's happening with auto finance may be another one of those risks to the financial situation that you need to keep an eye on as well.
I'll follow up on that because I know a little bit about that credit union, their primary customers, and I think you're going to get a kick out of this. Their primary customers in advertising was focused on college students in their junior and senior years before they graduated. What could go wrong on a $60,000 loan for a vehicle with a as a depreciating asset? I have no idea. But the University of Florida loved them.
Would this be a bad time to bring up student loan debt? That's coming back?
I can't wait till that hits next in January. People have no clue what that's going to do to the markets. And the other thing I'm going to throw out here real quick on Bank of America that people are missing is not only does Bank of America have a subprime auto loan problem, they have a subprime credit card problem. And that's why Warren Buffett might be backing out of that nightmare before it hits the stage, because there is no indication of a bailout mentality from the Trump incoming administration at this time. Now that will change, as we know, he changes with the wind, but there's a scary probability that we're going to see, and I agree with you, QE to infinity by next spring. Jack, would you please close the show out, advertise your website. I don't want to abuse your time. Bring everything up you want to advertise. Do it, because I think MacroEdge and your team at Doomer News Network, we're like a team together. We're sort of like cohorts. We just go to the bar and have a few drinks and talk about things. Advertise what you do. Bring it up on everyone. Remind them about your shows in the morning and afternoon, please.
Sure. My YouTube channel is called Nobody Special Finance. And just want to, since we've been talking for a while, I probably should have led with this. My background is mechanical engineering, guys. I worked in nuclear power for 15 years. And I got into finance a couple of years ago, mainly shortly after the repo madness hit in 2019. I knew something was up in finance. Wasn't quite sure what it is. So I'm pretty much self-educated, self-taught, no formal financial pedigree, hence the name Nobody Special. But that's my YouTube channel, Nobody Special Finance. I am at JG Nuke on Twitter. And we've got a new project called the Doomers News Network that I work on with Miss Melody Wright and Travis from another YouTube channel called Real Estate Mindset. And over at DNN, we basically say somebody has to is kind of the motto at our channel. And math matters because we don't put this endless positive spin on everything. We just give the financial news how it is. And, we're not paid by the finance industry. We don't have any conflict of interest that forces us to put everything in a positive note no matter what. And, I think, probably one of the reasons why things went the way they went in November, and I think part of the reasons why the press is taking such a hard look at itself right now, and MSNBC and CNBC are being sold off for parts pretty much by Comcast, is because they've been gaslighting the hell out of people. They've been feeding us BS. They've been telling us it's the best economy ever, even though we're all living in a world that is clearly not the case. Anybody who runs a small business or anybody who earns a wage for a living understands that, and they're sick of hearing it. And that's what we do at DNN is we don't do that gaslighting. We speak truth and we share the experiences that we're seeing on the ground all over the country. And we find that is resonating with people. So, and I'm going to give a plug to MacroEdge while we're at it too, because you guys also tell it how it is, because somebody has to. So thank you guys for everything you do as well.
Well, I got one more question for you. One of our MacroEdge Team, GBR LLC, has this, and I'm going to throw this in as a closing comment because, folks, what you're witnessing right now is a economy and a market in flux. One is betting on a future that has no prayer of existing, of sunshine, lollipops, and unicorns farting gold bars on everyone's head. And another one where you're seeing layoffs, contraction, and short-term to intermediate term fear of the risks from the credit markets. And if you haven't read the FT article about private equity and private credit, I highly recommend it. You can Google it and find it. But the question was, why are private credit firms approving loans with GPUs as collateral? This seems to fail really basic concepts of risk management. Jack, take it away, Jack, because I could vent on that for an hour.
Well, I don't have any proof of this, but I'm going to go out on a limb and I'm going to say those private credit firms probably own a boatload of NVIDIA stock, and they probably own a boatload of shares in SMCI. And I'm sure they're all going to make a lot of money when CoreWeave IPOs next year. These guys are making their money on the back end. They're not making money loaning against GPUs. That's how they're inflating this round tripping, channel stuffing, call it what you want, bubble. They're getting paid on the back end by selling something to retail investors. And I'm going to give you a quick anecdote. I promise to be fast. One of the companies, I mentioned CoreWeave, but the outfit that has been financing CoreWeave ever since they failed at Ethereum mining, after they failed trading natural gas, after they failed trading carbon credits, ever since they got into AI, all of their money for the first 2 years came from an outfit called Magnetar Capital. And there's something known as the Magnetar trade, because Magnetar has a history. That memorable scene in The Big Short at the sushi bar with the Asian guy and Steve Carell's messed up hair because he couldn't believe what a POS this guy was. That guy was a real person. His name was Wing Chow, and he was assembling CDOs for Magnetar Capital. And Magnetar Capital had him put the worst possible investments he could find into the CDOs, so that Magnetar basically had a guarantee of their failure. and they bet against them by buying credit default swaps on those CDOs. And then the investors who bought them were not informed that the people who created them bet against their failure or bet against them. Do you think the people investing in this bubble would like to know that the financing of it is coming from a firm with a history of creating landmines for retail to step on and making money when they blow up? That is who is financing this CoreWeave company, who is one of the biggest customers of both NVIDIA and Supermicro. So, why are they loaning with GPUs as collateral? Because they're trying to create a bubble that's making them rich, and it's working. That's why.
Jack, thank you so much for your time. I appreciate you going a little bit over for us. Folks, nobody special. YouTube. Nobody special. X. 9 a.m., 4 p.m. I know he conflicts with our time. We try to work together on this. I want to have him on every quarter simply to sit there and present updates on his view of the economy and the markets. It presents an alternative view that makes me look like a golden bull sometimes. But in reality, he's done a great job of explaining his position and the research he's put into NVIDIA. I can't put that kind of time into some of these stocks, but I can put my time into the things that I'm good at, transportation mostly, and logistics. And what we're seeing here is a broader slowdown in the economy. And none, I repeat, none of these companies, none of the AI bubble companies, none of the Bitcoin companies, none of the real estate speculative companies created by private credit have been tested in a truly recessionary environment. Think about that, boys and girls. If we have an actual real recession, a 1981-82 style recession, there's going to be a lot of things hitting that fan, and it's not going to smell so good. Stay tuned to MacroEdge.net, MacroEdge.net, Ozone. Request the 2-week free trial for MacroEdge Radio. One final announcement. We will hopefully have a very special podcast on Black Friday. It's somebody you've been dying to hear. It's somebody whose voice you want to hear. If things work out with the travel and other schedules, we will have this interview and reveal it probably on Turkey Day. For MacroEdge Radio, this is John Galt. Good night.